It feels like everywhere you turn, someone's talking about cryptocurrency.
It certainly is a hot topic.
But is it all it's cracked up to be?
Well, that's what we're here to explore.
Right. Like, I hear all this talk about it being the future of finance, but then there are all these stories about scams and crashes.
Yeah, it definitely has a mixed reputation.
So, where do we even begin? Maybe it would be helpful to start with the basics, like how does this stuff actually work?
Sure. At the heart of most cryptocurrencies is something called blockchain technology.
Okay, blockchain, I've heard that term thrown around a lot. What is it exactly?
It's essentially a digital ledger, a record of every transaction that's distributed across a network of computers.
So instead of a bank keeping track of everything, it's this network.
Right. That's the idea of decentralization. No single entity controls it.
That sounds pretty revolutionary. But how do we know it's secure? Who's verifying all these transactions?
That's where miners come in. They're people or companies with powerful computers who solve complex mathematical problems to add new blocks of transactions to the blockchain.
And they get rewarded for doing that.
Exactly. With newly created cryptocurrency, it's kind of like a digital gold rush.
Interesting. But I've heard that mining uses a ton of energy.
That's true. It can have a significant environmental impact, which is a concern for many people.
And isn't it kind of ironic that something designed to be decentralized ends up concentrated in the hands of a few big mining operations?
It is. It raises questions about how decentralized crypto really is in practice.
Okay, so we've got this decentralized system with miners verifying transactions. But can you actually use crypto to buy stuff?
Well, that's where things get a bit tricky.
How so?
One big hurdle is volatility. The value of cryptocurrencies like Bitcoin can swing wildly. Imagine going to the store one day and the price of bread and Bitcoin has doubled overnight.
Yikes. That would make budgeting a nightmare.
Exactly. That's why a lot of businesses that say they accept crypto are actually using services that instantly convert those payments into dollars.
So it's not really being used as currency in those cases.
Not directly, no.
That's interesting. What about other issues? Are there any other reasons why crypto hasn't really taken off for everyday transactions?
Well, there's also the issue of irreversibility.
What does that mean?
Once a transaction is on the blockchain, it's virtually impossible to reverse. So if you accidentally send crypto to the wrong address or you fall victim to a scam,
You're out of luck.
pretty much. Unlike with traditional banks, there's no central authority to appeal to.
That sounds pretty risky.
It is. It's definitely a caveat to be aware of.
Okay, so volatility and irreversibility. Those are some pretty big hurdles. What about stable coins? Aren't they supposed to be, well, more stable?
They are. Stablecoins are designed to maintain a stable value, usually pegged to a traditional currency like the US dollar.
Ah, so that solves the volatility problem.
In theory, yes. But there are different types of stablecoins, and each has its own set of challenges.
Such as?
Well, some are backed by reserves of traditional assets, like dollars or government bonds.
Okay, so like a digital version of a dollar.
Sort of. But there have been concerns about transparency. Some critics worry that these issuers might not have enough reserves to back all the stablecoins in circulation.
So there's a trust issue.
Yeah, and then there are over-collateralized stablecoins, which are backed by even more valuable cryptocurrencies.
That sounds complicated.
It can be. And then there are algorithmic stablecoins, which use code to try to maintain a stable value. But as we saw with the collapse of the Terra Luna system, that approach can be very risky.
So stablecoins aren't a foolproof solution either.
Not necessarily. They're still a work in progress with their own complexities and potential pitfalls.
Got it. Now, I keep hearing about smart contracts. What are those all about?
Smart contracts are basically self-executing agreements written in code and stored on the blockchain.
So, like a digital vending machine.
Yeah, that's a good analogy. You put in your crypto, the conditions are met, and boom, the contract executes automatically.
That sounds pretty efficient. But what happens if there's a mistake in the code?
That's the catch. Because the blockchain is irreversible, any bugs in a smart contract can have major consequences.
So it's like a contract written in stone, but with the possibility of typos that could cost you a fortune.
Ouch. Yeah, that's a good way to put it. So thorough auditing is crucial.
Okay, that makes sense. Now, what about these DAOs I keep hearing about? What are those all about? They sound like something out of science fiction.
DAOs, or decentralized autonomous organizations, are basically trying to replicate traditional companies or cooperatives using blockchain technology.
So, like a company run by code.
In a way, yes. They use tokens to give members voting rights and a say in how the organization is run.
Sounds interesting, but also potentially chaotic.
It can be. There are also concerns that some DAOs might be issuing tokens that function like unregistered securities, which could raise regulatory red flags.
So it's like the Wild West out there, with all this innovation happening faster than regulators can keep up.
Exactly. It's a constant game of catch-up. Some say more regulation is needed to protect consumers and prevent fraud.
It definitely seems like a balancing act. On the one hand, you want to encourage innovation, but on the other hand, you need to protect people.
Absolutely. It's a delicate balance.
So, after hearing all this, I have to ask, is crypto the revolutionary force some people claim it to be? Or is it just a giant scam waiting to implode?
That's the million-dollar question, isn't it? And to be honest, there's no easy answer. There are compelling arguments on both sides. There are definitely strong opinions on both sides.
So let's dive into those arguments. What are the main criticisms leveled at cryptocurrency?
One of the biggest criticisms is that it's all just a big Ponzi scheme.
A Ponzi scheme. You mean like where early investors get paid with money from later investors, and eventually it all collapses?
Exactly. Critics argue that cryptocurrencies, unlike stocks or bonds, don't represent ownership in anything tangible. They say the only way to make money is to find someone else to buy it from you at a higher price.
But isn't that true of any investment to some extent? People buy stocks hoping they'll go up in value so they can sell them later for a profit.
True, but traditional markets are at least somewhat grounded in economic fundamentals. Companies generate revenue, have assets. Cryptocurrencies, they argue, are purely speculative, driven by hype and market manipulation.
Speaking of manipulation, how susceptible is crypto to that?
Very. The lack of regulation and the decentralized nature of the markets make it ripe for manipulation. You have things like wash trading, where
Yeah.
people artificially inflate trading volume to create a false sense of demand.
So basically, tricking people into thinking there's more activity than there really is.
Right. And then you have whales, individuals, or groups who hold massive amounts of cryptocurrency. They can move markets with their trades.
Sounds like a recipe for disaster for the average investor.
It can be. That's why a lot of institutional investors are still hesitant to get involved.
So if it's not all just a scam, what do proponents see in cryptocurrency? Why are some people so bullish on it?
Proponents believe crypto has the potential to revolutionize finance. They see it as a way to create a more efficient, transparent, and inclusive financial system.
Okay. How so?
Well, for one thing, transactions are faster and cheaper. You don't have to go through banks or intermediaries.
And they see this as empowering for individuals.
Absolutely. It cuts out the middleman and puts individuals in control of their own finances.
What about all the talk of DeFi, decentralized finance? How does that fit into the picture?
DeFi is a big part of the crypto vision. It aims to recreate traditional financial services like loans and insurance on the blockchain.
So you could get a loan without going through a bank.
Right. Or you could earn interest on your crypto holdings without relying on a traditional savings account.
That sounds pretty radical.
It is, but DeFi is still very much in its early stages. There have been a lot of hacks and scams.
So it's a bit of a wild west out there.
Definitely. The technology is still developing and the risks are high.
It seems like with crypto, there's a lot of potential, but also a lot of risk. What advice would you give someone who's thinking about investing in it?
First and foremost, do your research. Understand what you're investing in. Don't just blindly follow the hype.
Solid advice.
Yeah.
Anything else?
Don't invest more than you can afford to lose. Remember, this is a volatile market. Prices can go down as quickly as they go up.
So approach it with caution and a healthy dose of skepticism.
Absolutely. And be wary of anyone promising guaranteed returns. If it sounds too good to be true, it probably is.
Great advice. It sounds like with cryptocurrency, it's important to keep your head on straight and your expectations realistic.
Exactly. It's important to remember that this is a new and evolving space. There are a lot of unknowns.
So where does that leave us? Is crypto a scam or a savior?
It's really too early to say definitively. There are valid arguments on both sides. It has the potential to change the world, but it also has the potential to implode. Only time will tell how it all plays out. It's fascinating to watch, isn't it? This whole thing unfold.
It really is. But with all this talk of scams and volatility, some people might be wondering, is crypto even worth the risk?
Well, that depends on your individual circumstances and risk tolerance. But even if you never invest a single dollar in crypto, it's worth paying attention to.
Why is that?
Because it's already having a significant impact on the world. It's forcing us to rethink our relationship with money, technology, and even power.
That's a good point. What are the key takeaways our listeners should remember?
Well, first and foremost, do your research. This is a complex space, and it's easy to get caught up in the hype.
Right. Don't just jump in blindly.
Exactly. Understand the technology, the risks, the potential rewards. There are a lot of resources available to help you make informed decisions.
And what about the risks? What are some of the red flags people should watch out for?
One big one is anyone promising guaranteed returns. If it sounds too good to be true, it probably is.
That's good advice for any investment, really.
Absolutely. And be wary of scams. There are a lot of bad actors out there trying to take advantage of people.
So, common sense and caution are key.
Definitely. And remember, security is paramount. Protect your digital assets like you would protect your cash.
So, strong passwords, two-factor authentication, all that good stuff.
Exactly. Don't make it easy for hackers to steal your crypto.
Okay, so we've talked about the risks, but what about the potential? What are some of the most exciting things about cryptocurrency?
I think one of the most exciting aspects is the potential for financial inclusion.
How so?
Well, billions of people around the world are unbanked. They don't have access to traditional financial services. Crypto could provide a way for them to participate in the global economy.
That's pretty amazing. Any other potential benefits?
Yeah, I think crypto could also lead to greater transparency and efficiency in financial transactions.
Okay, how would that work?
Well, because transactions are recorded on the blockchain, it's much harder to hide things. This could help reduce fraud and corruption.
So it's like a public record of everything.
In a way, yes. And that could have a huge impact on a lot of industries.
It sounds like cryptocurrency has the potential to be a very disruptive force.
It does. But whether it ultimately succeeds or fails remains to be seen.
It's a fascinating experiment, that's for sure. And it's one that we'll continue to watch closely.
Absolutely. It'll be interesting to see how it all unfolds.
You know, I've been thinking about our conversation, and it reminded me of a song that might offer a different perspective on power, individual agency, and the systems we operate within.
Yeah, I'm always up for a good song recommendation. What is it?
It's called That's the Working Man by Shotgun Sawyer. It's not directly about crypto, but it explores these themes about, who holds the power, how individuals can make a difference, the forces that shape our lives.
Oh wow, that sounds really relevant to our conversation. I bet our listeners will find some interesting parallels there.
Yeah, I think so. It's one of those songs that just kind of stays with you, makes you think.